Okay, guys, welcome to another weekly market review session. Okay, so we are coming to the end of October. Some really interesting stuff I want to go through. Okay, we've been seeing so far with the markets not really following the seasonality of how it typically goes, and the reason for that is because of a war that just broke out. Okay, and also Jerome Powell speaking last week. Okay, so Jerome Powell spoke last week, and very simply what he said was he feels inflation is still too high. So because of that, there may be future or he may consider still increasing interest rates or any rate hikes to curb inflation for what's happening right now. Okay, so because of that, you can see the 1 week performance of S&P 500, all our tech stocks, our Microsoft, let me just zoom in, our Microsoft, our Apple, our Nvidia, Google, Amazon, all down last week. Okay, quite a bearish week for ourselves. Okay, so the reason for this again, because Jerome Powell spoke. So if you see last week, okay, so last week on Thursday, Jerome Powell spoke and the market decided to tank. Okay, so if you go on Forex Factory or economic calendar on the economic calendar for investing.com, either one of these two websites, you can actually go and see the amount of times that Jerome Powell has spoke, okay, throughout the year. And I took the liberty of putting that on our S&P 500 chart. And very simply, you can see one thing very clear, which is every time he speaks, okay, definitely the markets have some strong movement. Okay, it could be up or down, but it does have a strong movement. So for example, if you look over here, he speaks, prices go down majorly for a couple of days, but then we end up having a major rally up. Okay, so that's one. Again, over here, pull back, and then we have a big rally up for the prices. Okay, again down here, and then we have a jump here as well because he spoke again and driving prices up. Okay, now this time or around August, however, he spoke, the market went down, he continued to go up, sorry, and then what happened, he decided to pull back down for the price action. Okay, so again, even recent one for itself, pull back down, go up, and then now as of last week, okay, when Thursday he spoke, the prices have plunged back down. Okay, now what does this tell us, or what does this show us? Well, very simply, whenever he speaks, he can cause volatility. Can I say that now the markets will go back up? Because if you notice, every time he speaks, it comes down, then goes up, comes down, then goes up, comes down, then goes up. So is that what's going to happen? Truth be told, may or may not happen. Okay, this could be again possible start of further downside. It could also just be temporary because of what's happening now with the instability in the war. Okay, but if you look very carefully, what I want to show you is you can actually see a very smooth downtrend that's happening right now. Okay, so if I take what's happening right now here, okay, you can see we go down. Okay, so this is my point 1, then go up, this is my point 2, then we make our way down, my point 3, we pull back up, my point 4, and now it looks like it wants to continue for a 5th movement for itself. Okay, so it's currently at the support level. It could go further down, okay, and make further levels for itself. Okay, so it definitely could go further down. Okay, now at the same time, if we look at my FIB, right, we are still at my 38.2 level. We have not hit my 50% level yet. To me, once we go past our 50%, I will change my stance. I will become bearish on the markets as well, because around the 417 to 416 levels is really a critical point. Typically, when price breaks at the 50% mark, it has potential to move down further for itself. Okay, so what do I mean by this? If I go to my hourly chart, okay, you can see SPY having this movement. If I measure this movement up for itself, okay, you can see the prices go up, down, we chop sideways for itself. But the moment it breaks, okay, test my 50% level and it breaks, we have further movement to the downside, almost coming to my 1, which is where we started from. Okay. So again, I'm going to watch out for the 50% level on the 1 year, 1 day chart. Okay. What is that? Very simple. It's over here. So it's roughly around my 417 to 416 levels. Okay, this is where I'll watch out for. If it does break below this, then I will say we are in further downside. I will turn bearish for the short term and on the markets. Okay. Now, another thing as well, if I open up my 200 SMA, you can see that the price is sitting very nicely on the 200 SMA. Okay. So you don't want to do shorting or be bearish when prices are at a support. Okay. If it's a resistance and you want to short, that is fine. But if it's a support, that's not something you want to do. Okay. So if you look very carefully at the price, again, 200 SMA is here. There also is a support level that is here. Also a small gap as well. Price is looking to cover that gap too. Okay. So we are at a relatively strong level for it to break. And if it breaks, can go to 417, like I mentioned. But if it holds, then it may start to reverse back up. Okay. For now, temporarily, I'm neutral. Okay. If it does break below 417, it's bearish. If it does go up, will I be bullish? Not necessary. I need to wait for it to break one of my critical levels. Okay. What is that level? Very simple. If I draw my FIB, okay, my 50% level, which is around 438. Okay, over here, 438. If we can break the 438 level, then I will turn bullish on the markets. Okay. But as of now, I'm remaining neutral. I'm looking at where it goes. If it's further downside, then bearish. If it only breaks 438, then I will turn bullish. Okay. So what does this mean for your positions or existing positions? Very simple. Okay. For swing trades, it's not something I'm doing now because I can't gauge the direction of the market carefully. It is very choppy and volatile, so I'm avoiding that. For day trades, this is the best thing you can do at this point of time. So even our community over here, we're doing day trading. People are making daily profits for themselves, and that's good because there's no overnight risk. You enter today, you exit today during market hours. Okay, so day trading is the best way to go. You take each day as it arrives. Okay, now for position trading or long positions for your individual portfolios, if you're doing on stocks, good companies like Apple, Microsoft, Google, you can hold them. Okay, those are fantastic stocks, getting it at a discount, holding it for the next 1 year, for the next 6 months. When it goes back up in price, definitely you can sell for a profit. Okay, and those of you who are talking about investing, these are excellent levels for you to invest in your S&P 500, because again, not every time on an uptrend does the price come down to the 200 SMA. All right, so these are good levels for you to go and add shares. Okay, and again, guys, if I check the fear and greed index, haha, lo and behold, we are back to fear levels. Okay, and it's really crazy because literally just 2 months or 3 months ago, the market was extreme greed. Okay, so now we are back to fear and extreme fear. This is the time to be, buying your long-term investments at a discount. Okay, so your S&P 500, your QQQ, SPYG, these are the ETFs that you would buy and keep for the long term, okay, at a discount. For long positions or position trading, your Apple, Microsoft, Google, Amazon, you can afford to buy them. Dollar cost average down. Okay, don't go in all at one go. Go in tranches for your position trades as well. Okay, and the next thing is, when will I, do swings or have a direction on my swings? Like I said, number one, it has to break my 417 levels. Okay, so again, I think if I draw my trend, okay, if I look at the chart over here, sorry, I draw my support line. There's a gap here. Okay, so this is my 200 SMA level. Okay, if it drops, can it go further? Yup, it probably can, maybe up until the 413 levels. Okay, so even though my 200 SMA is here, does it mean that it will hold and go up? No, it can go down a bit more before it reverses as well. Okay, how do I know this? Again, I look back at past data. I can see over here, previously, again, we moved down. This is 1.1. Then we went 0.2 up. Now 0.3, when it came down, can you see? It went down below my 200 SMA for a couple of days. Okay, so went down for about 4 to 5 days, and then it made its way back up. Okay, so for the next couple of days, if we do continue this bearish movement, prices can go down below the 200 SMA. It can stay there for about 4 or 5 days before there's a reversal. If it stays there more than 4 to 5 days, then there is a possible change in the trend, and then I will be bearish and probably take some swing trades for my portfolio. Okay, so this is how I'm viewing the market. This is what my perspective is and how things are shaping up. Okay, so again, approach the markets cautiously. Even though seasonality is right, so even though seasonality is looking like it's available, it's normally going up, it's not happening this time round, and of course due to unforeseen circumstance, but this is what the technicals is showing me as of now. Okay, so with that, guys, I've got nothing else. Just approach the markets cautiously. Day trading still a go. Okay, swings, not doing swings for now. Position trades, still accumulating, still neutral on the markets. Okay, and waiting for those key levels to break. For bullish, above my 0.5 level, which is about 437, 438. For bearish, that is below my 417 levels for themselves. Okay, so that's it for this week's weekly market review. I've got nothing else. So like every other video, guys, take care, stay safe, trade safe, and I'll see you in the next video. Okay, take care, guys.